Welcome. I'm Dennis from Wally, and today we're going to talk about the concept of paying yourself first. To become a long-term successful stock investor, you need to do a few things. One of those things are to save money so that you can invest it in the stock market. Since the age of 16, I've been saving my money and I've been investing it. But the important thing to remember is it doesn't really matter how much money you have. You should always take a percentage of your salary and save it for the longer term. And that's where the concept of paying yourself first comes from. It was actually introduced by a Canadian author named David Chilton, who wrote the book The Wealthy Barber. He also wrote a follow-on novel just a few years ago called The Wealthy Barber Returns. He talks about a lot of key concepts for the layman person just so that you can have sound investment knowledge. We're going to push it a little bit further, but we're going to talk specifically today about the concept of paying yourself first. So what it means is, let's say you have a check or a revenue of $1,000 every 2 weeks. You would take a percentage of that and allocate it towards your longer term savings plan, or in our case, towards stock investing. So I would argue that if you are young, it doesn't matter if you're taking 10 or 20% of your salary, because if you're making $1,000 every 2 weeks and you take it 10%, you're taking $100 and you're investing that. And you're always doing this, and you're going to continue doing this for the rest of your life until you become financially independent. When I started doing this, I was taking 30% of my salary, and to this day I take well over 20% of my salary and continue investing it for the longer term. Not many people can do this because once you start having a family and kids and dependencies, it is very hard to take 30% of your salary and save it for the longer term. However, I would argue that everyone is capable, regardless of your salary, if you're making $30,000, $50,000, or $70,000 a year, you have to take 10% of your salary and you need to invest it for the longer term. That's the concept of paying yourself first. It means that before you spend that money on bills, on entertainment, on trips, on any possible expenditure that you think might be required, you actually take 10% of your salary and you allocate it towards yourself, towards your long-term savings plan. If you have any other questions about the concept of paying yourself first, please comment below and I'll be sure to make a second video on this topic. I think that it is important that on your trajectory to becoming financially independent, that you learn to save money and that you do it on a regular basis. Thanks for listening, guys, and if you'd like to subscribe to our channel below, that'd be great. I'm going to be making many more videos. If you have a topic of interest that you'd like me to make a custom video for you, please let me know, and I'd be happy to do that for you. I hope you have a great day. Thanks.